Have you thought this through?
No way will that work.
Are you sure? Is there any money in that?
You'll never make any money doing that. How are you going to pay the mortgage? Just get a job.
You're going to try and sell that? Why can't you be normal like anybody else?
All right.
Were your parents morons too?
The savvy entrepreneur to the rescue.
Congratulations. That really turned out well.
Really good job.
I'm going to admit it. I'm surprised.
You know, I wish I thought of that.
I never thought anyone would. How did you do that?
I'm so glad you're pursuing your dream.
I wish I had the courage to follow my dreams.
Hey, good morning out there. Welcome to the Savvy Entrepreneur. I am your host, Doris Nagel, and I am a crazy entrepreneur myself, and I love helping other entrepreneurs. I've counseled lots of startups and small businesses over the past 30 years as part of my law practice and advisory services, but I've also helped started on my own at least 9 different businesses, and I can tell you I have made plenty of mistakes along the way. So my passion is to share what I've learned, find other experts and entrepreneurs to also share their advice, their insights, and their stories. We have 2 goals here at the Savvy Entrepreneur: to share helpful information and resources, but also to inspire and hopefully make your journey as an entrepreneur faster and easier. Without further ado, I would like to introduce our guest for today. Our topic is borrowing money, and specifically what lenders look for when businesses like yours or mine come looking for money from the bank. And with us, we are delighted to have live in our studio today to talk more about that, Wendy Basch, who is the Director of Commercial Lending at BCU. Wendy's a very experienced commercial lender. She's got more than 30 years experience in the banking industry. Prior to BCU, she was at a number of different lending institutions, including Alliant Credit Union, Ridgestone Bank, CharterOne Bank, First Midwest Bank, GE Capital, and others. Just a word about BCU. BCU is a local credit union focused on serving customers and home to almost 250,000 members. I will let Wendy talk a little bit more about BCU in just a second, but I want to say, first of all, Wendy, thank you so much for being our guest today. Welcome.
Thank you, and thanks for having me, Doris.
Wendy, talk a little bit about BCU.
BCU is as you said, a local not-for-profit credit union headquartered out of Vernon Hills. BCU started in 1981 when a group of executives in the healthcare industry elected to establish a credit union for the convenience of the industry's employees. And actually, that's a theme that rings true even through today. We continue to partner with great companies, almost 100 of them, and as a matter of fact, and we offer our services and products to their employees.
What are some of the advantages of belonging to a credit union like BCU?
Well, one distinct advantage is once you become a member, no matter if you move out of state, you are always a lifetime member. Some other benefits include, because we're not for profit, everything we do is for the members. And so that affords us the ability to offer low rates, low fees, and higher dividends and more innovative products than you would find in other financial institutions.
Very personalized kind of service that
everything is really around the member first experience.
So that should be music to ears for those of us in the community who are businesses, because sooner or later most businesses need a bank account, and there's a decent chance that they're going to need money at some point in time. So what kind of business loans or credits does BCU provide to businesses, for example?
So we have a whole suite of loans to cater to the business member, and that includes business credit cards, lines of credit, which are both secured and unsecured, term loans, and commercial real estate loans.
What are the most common reasons that businesses apply to BCU for a loan?
So a large part of our portfolio is commercial real estate, both owner-occupied and non-owner-occupied, but I do see a lot of requests for small businesses that are looking for, maybe they want to take advantage of some inventory purchases and get a discount, and so they want to buy that maybe off-season, so they'll apply for a line of credit. I see a lot of term loan for equipment purchases, which are also can be very smart to add to your business, especially if you're manufacturing something and you want to create more products and grow to the next level.
What are you and other commercial lenders at BCU looking for when you decide whether to issue credit to a business or how much credit?
Sure. Well, we're looking for businesses that really have been operating for at least 3 years and have at least 2 years of profitability. I understand there's a need out there as well for startups. That just isn't our space, but there's certainly a lot out there to help a startup business. So we are looking for members who have been keeping their credit good above 650 and who have a passion for their business and can tell us not only how they got in business or why, but where they're going and how they're going to get there.
What are the typical mistakes that you see when businesses come to you wanting money?
So a lot of mistakes are not having seen or looked at your credit in a while, and maybe there's some unpleasantness in there that they haven't addressed. I also see sometimes there are economic and environmental factors to a business where the borrower maybe hasn't considered the impact on the long term.
So give me an example of that.
For example, if somebody came to me and were looking to invest in a big box mall, big box meaning like...
Well, that's probably not a good idea.
Right,
anyway.
exactly. Well, it's choosing the right product, right, and the right business and the right service for the times. I mean, a lamplighter isn't going to come get a loan from you. There's no lamps to light. You know what I mean? I'm going kind of way back.
Right. A horse and buggy.
Right.
Business.
Right. Whip makers.
Yeah.
For the horse and buggy.
Movie rental.
Right.
That sort of thing.
Yeah. So understanding even government restrictions on business, or even business owners who maybe don't realize that our industry is regulated. And so they are always wondering why so many questions, why so much paperwork, because, we get audited and we have regulations that we have to follow. So, there's a reason why we're asking for certain things.
Well, so I want to dive deeper into that because I think that's pretty interesting. Fair disclosure, I've never actually borrowed money for business purposes before, but I certainly have from a residential perspective. And I know I was surprised to learn, fortunately my loan officer was kind enough to educate me on a number of requirements, because I said, well, that doesn't make sense. I don't see why I have to have this or that, typical lawyer pushing back, negotiate the system, and he very kindly and gently told me, I wish I could help you here, but we're regulated and there are certain thresholds and ratios and certain requirements that need to be met. Talk a little bit about what some of those kind of requirements are that maybe businesses would run into or maybe might even be surprised by.
Sure. I think the most recent change in regulation requires lending institutions to obtain at every loan request and every product request a certification of ownership of the business. So even if the member has been with us for a while and we know it and they ask for a new product, we have to get this form.
Wow.
Yeah. So
well, that's a pain.
It is kind of a pain. And of course they're thinking, well, you know me so well. Why do I have to fill this out?
You're my neighborhood bank. You're supposed to be personal and friendly. How can you not know this?
Exactly. But auditing requires us to keep those forms on file, and we get audited on those forms all the time.
So what are some of the other kinds of federal requirements? Because I think people who borrow money don't always understand which things are bank driven and which are actually driven by regulations that you just can't get around.
Well, first of all, consumer versus business are two totally separate worlds. Okay. You're going to have a lot more consumer regulations than you would on a business side.
Are there ratios or?
Oh, yeah.
So talk a little bit about, see, I think that's probably a foreign world to most,
Okay.
Especially small business people and solopreneurs or, onesie, twosie, threesie kind of businesses that haven't been through this before.
Sure. So those aren't actually going to be federal regulations. Those are going to be by the institution and their personal lending policy.
Oh.
So one primary ratio metric that we use on all loans is our debt service coverage ratio. And most business owners, if they've applied for a loan, are familiar with that term.
Okay.
So this is your net operating income divided by the debts you're going to have to pay over the next year. And that ratio
including the loan payment?
Including the potential loan
Okay.
payment. And that a healthy ratio would be north of 1.25 to 1. So kind of think of it as 1.25 more a dollar of income versus dollar for debt, right?
Gotcha.
Yeah.
So you should be making some profit even after you
Make the loan payments. Absolutely.
So what are some things that you've seen most commonly that cause businesses to not be able to meet those kind of thresholds?
What I see a lot is people who maybe haven't aligned themselves with a good lender and have taken on an enormous amount of debt that is of high interest rate.
Wow. You mean like credit card debt or
credit card debt? It could be non-bank lenders just to get by. They maybe went to that source because there was a great need and they needed to have it in a hurry. There could be a number of reasons for that. But if you're really venturing into business, you should probably sit down and look at your cash flow or get familiar with how cash flow works on a weekly or even daily basis. That's going to be key for you to control your profitability and what you need to do in your business, how much sales you're going to need to generate, your profit margins, and how to control your expenses.
Do most business owners who come to BCU, do you find that they have a good working knowledge of that, or is that something that you end up coaching them a little bit on?
Yeah, we have the whole gamut. We get some more sophisticated and less sophisticated business owners, and we guide them along the way if they don't know about it.
So how do you do that? Just the individual loan officers are coached to help the businesses go through that process?
Sure. We take an in-depth look at their financial statements, have a dialogue with the owner to understand the events that impacted those numbers so that we can really guide them and show them kind of what might be obvious to us. Have you considered, these options? Have you considered cutting that night shift?
So you really venture even into almost business consulting on some of the questions, really looking at the business from a holistic perspective, it sounds like.
Yeah, on a small scale, yes.
Are most of the loans that you issue secured or unsecured?
So our loans are mostly secured, although we do offer an unsecured line of credit as well as a business credit card. Neither of those have hard collateral securing them.
What kinds of things do you take as security typically?
So we'll take accounts receivable, equipment, inventory, even cash or a CD or commercial or real estate. And each of those will have a different factor on how much we can lend against those based on our policy.
And what about unsecured loans? How do you decide when somebody comes to you and they don't really have inventory? Because obviously more and more businesses these days are service related, and I don't, I don't know, how do you, I guess you could take accounts receivable, but
yeah.
So even that gets to be a little unpredictable for some service businesses.
Sure. So then we would have to turn to the cash flow of the business. How strong is it? How strong has it been? Is it trending in the right direction? And then we would look to the guarantors to see what their personal credit looks like. And if it's strong and the cash flow is there to support the repayment of the loan, then we can feel comfortable about going into an unsecured loan.
So what kind of business makes the best client for you? I mean, what kind of skills should they have? What kind of experience or expertise or just knowledge should they have to really be a good client for you?
Sure. And it's not even a good client, but you want them to be successful. So you have to be a little savvier today than you used to be.
Yeah?
How
so?
Well, you have to do your homework. You can always tap into a commercial lender that's in your local lending institution. They are a wealth of knowledge. But you want to come to the table with full disclosure, and you want to be truthful in what you're presenting, right? There's nothing worse or nothing that'll kill a deal faster than if the lender finds out that you have an IRS tax lien, or they find out that you have a pending litigation.
All right, so
or
you've got to have a story or two here. So share with me. I didn't know names,
Sure.
faces. From all the years of your experience, a couple of things where you found businesses, I'm sure, thought that they were kind of like packaging their home for sale, you know, kind of, they want to put it in the most positive light possible. Tell me a couple of stories of things
Sure.
that you found or you've had colleagues find that were surprises.
Well, even recently, a few months ago, we were ready to close a deal, and the title came up, and there was an encumbrance on title because there was a judgment entered against this borrower for a slip and fall. And in my experience, I've seen a lot of nuisance slip and fall cases, but when I called the member, they indicated, we have no idea what you are talking about, which is unusual.
So they really didn't.
They really didn't. And I thought, how could you not know when a judgment is entered against you? Well, it turns out that they had an old attorney represented as the contact under the Secretary of State.
Okay.
And all the notifications were going to that old attorney. And the old attorney was not, I don't know what they were doing with that information, but they weren't making our member known.
That sounds like a disciplinary action from an attorney perspective.
Yeah.
But anyway.
And so when they didn't show up to court, a judgment was entered.
Oh, my goodness.
Yeah. So how we were able to navigate around that was we worked with the title company, and we said, look, here's what we think the actual monetary damages would be or could be. And we agreed to hold back about $120,000 in escrow with the title company until that matter was resolved. Fortunately, they were able to get their attorney involved, get it all squared away within a month.
Wow.
And get that money back. But there's so many moving parts when you're closing a loan that these things come up, and more importantly, we didn't walk away. We were able to navigate through it and make it work still.
Well, and also in this case, it was something that the business owner didn't even know about. Right. And I'm sure, those of you who have borrowed money or tried to buy or sell a house have found some of the same kinds of things where you're like, what? That doesn't make any sense. But of course, then everything slows to a screeching halt until it's all resolved. Yeah. So there's got to be a couple of stories, though, of ones where the business owner thought they were doing themselves a favor by not quite coming clean with.
Oh, yeah. So I also have years of workout experience, too. So I have plenty of cases of deliberate fraud where, we were working with somebody for years and looking at their books. And actually, this was back a few years ago, 10 or more. And the borrower actually had 2 sets of books. And,
what?
Yeah. And
I thought that only happened in like third world countries or something.
Nope, still happens. And at that time, that kind of loan was for inventory, so boat inventory specifically. And so that inventory has a tendency to move around a bit, right?
Oh, yeah, that's right.
So we saw all kinds of scams about, we'll give you free shrink wrap if you bring your boat back, so that when the bank comes and they count the inventory, your boat's there, but it's really sold and unpaid. So,
wow.
I've seen lots of different examples.
All right. And I have more. These are great stories. These fall under the heading of believe it or not.
Yeah.
Right?
But I do want to say that even with all those years of workout, I want to say that 99% of borrowers want to do the right thing, and they do the right thing to the best of their ability.
Well, so there's probably a gray area in the middle, okay? So there's the schemers and the scammers, and those people, any bank that finds out about them, whether it's BC or any bank, is going to want to run for the hills because these people are... You don't know what to trust on them. And then there's the ones on the other end of the spectrum, which are things that the borrower didn't have any clue about, literally, sincerely, and honestly, until the whole process, the due diligence process came to light. There's got to be stuff in the middle, though, where people just think that they're painting a rosy picture, but not really helping themselves. Yeah.
That explains pretty much every projection financial statement.
Well, there you go. There you go.
Over optimistic, representations of where the company's going to go. I think one skill is to be realistic about, your industry and your business. Coming to me and saying, I know I've had 3 years of losses, but I just feel like this is going to be a great year is not sufficient enough to support, a projection. I mean, you really got to know your industry, know what's going on, and really have some basis and assumptions built in, right, to where you're going.
Yeah.
But you're right. I mean, if a lender is going to fraud you, deliberately, they're gonna find a way to do it, and we try to prevent against most of that, and that's why we have all these regulations and these policies. But for the most part, if you come with full disclosure and you tell us up front some of that hair on the deal, we could probably navigate it rather than try and hide it or push it under the rug.
So what does the borrowing process look like? I mean, how long does it usually take? And what are some of the kinds of things that you ask that a potential lender should pretty much have lined up before they come to you?
Sure. That's a great question. What I would recommend to all the listeners who are going to go into a bank and ask for a loan is have this kind of in your arsenal. 3 years of business tax returns, if available, or 3 to 5 years of projections. Be prepared to say what you base those projections on, include all of your assumptions. 3 years of personal tax returns, a personal financial statement, which just says what your assets and your debts are personally and what your personal tangible net worth is. Know your personal credit score and be prepared to explain any ugliness that appears there. Include your resume or a bio, a brief paragraph about you and your history and why your experience is lending to this request. And then if you're a startup, have a business plan. I saw that you had a guest speaker that talked about SBA recently.
We've had actually a couple of guests who've talked about business planning, including the Illinois Director of the Small Business Administration.
Fabulous.
Who you probably know. They are passionate about planning. And we actually had a guest a couple of weeks ago talking about growing business value. That gets a common theme here. There's been a lot of common themes through our guests, actually. But one of his points was to really keep growing the value of your business. You need to have a business plan, and a business plan that's not a binder that you stick on the wall, but literally a live document that's updated fairly regularly that has both short-term and medium-term objectives. It's not a 5-year growth plan that you come up with some crazy assumptions, whatever you can at the moment, and then you stick it on a shelf. It needs to be a living, breathing document. And the point that both of those speakers made is that the quality of the business thinking that comes out of that, it's so obvious which business owners have actually been through that process and make it a living, breathing process versus ones that put it on a shelf. It's not the document, it's the process.
Yep.
And the business owners that go through that process and keep that fresh and current are head and shoulders above where the others are, was kind of their observations.
Yeah. I agree wholeheartedly, yeah. It is something that's ever evolving, and you have to be looking at your performance, your cash flow on a daily basis so that you can make those changes to that living, breathing document.
There's so many changes that happen so quickly. I mean, certain industries, who would have guessed, for example, that the big malls, when did that transformation happen? It happened fairly quickly, really.
It did, yeah.
From being a very vibrant kind of place to be to everybody talking about how they're going to redevelop their malls.
Yeah.
Movie rentals, that whole industry is changed. Taxis with Uber and Lyft.
Yeah.
I mean, the industry changes that you need to keep up with, and competitors of figuring out where unlikely competitors might come from is a constant process.
It is. I mean, the technology behind all those things that you just mentioned have been huge contributors to those changes, right? Online purchasing,
right.
Less bricks and mortar stores. But
right.
they're finding, I've read a lot more articles lately that bricks and mortar aren't going to go away in total. People still want to go in and try it on and touch it and feel it. Yeah. So even though they'll reduce, I doubt that they'll ever go away completely.
Right. Just for me personally, there is a different experience that goes into walking into a candle shop or a shop that sells lotions and bath products that you can touch and put on your skin or smell. I mean, online experience is never going to replace that.
Absolutely not. It's very tactile.
Yeah. I hope those kind of shops never go away because I would miss that experience.
Yeah, me too.
And there's other changes too, obviously. I mean, you alluded to government changes. There's always regulatory changes that seem like they can affect a business, whether it's interest rate changes or if you're sourcing from places like China, trade regulations and tariffs and taxes and things like that are always changing, right?
Absolutely, yeah. We see a lot more importing businesses, so heavily, obviously, would be impacted by those trade regulations.
I know you've had experience with other kinds of lending. What are some of the things that startup businesses or borrowers that don't meet your criteria, what are some other things that they should maybe think about in terms of getting ready to eventually get a bank loan?
So if you're not quite bankable yet, there's some things you can do to kind of prepare yourself. So, for example, in this last month, I probably had 4 requests from borrowers who didn't qualify either because of their credit rating or their cash flow, their business cash flow. But we were able to get them just some experience. So we put some money in an account, a CD, like an interest-bearing CD, and use that as collateral to give them a secured credit card or give them a secured line of credit where we can, give them exactly how much they've put in. So that just gives them some experience so they can get down the road, let the business season, let them get to where they need to as far as cash flow and as far as their credit scores, and then be able to open kind of the gates at that point to something more without collateral.
So, without promoting competitors, though, are there other kinds of products that they ought to maybe think about?
Sure.
As a place to start if they're just getting started or they don't meet your threshold?
Sure. There's plenty of lenders like Cabbage and Lending Tree, Loan Builder. These are non-bank non-traditional lenders where...
Well, what does that mean, non-traditional lenders?
So they're not a bank or a credit union. They're not governed by the FDIC or the NCUA.
Well, that must be nice.
Yeah.
But I guess that means they need to be very careful.
They do. And these that I mention are more credible, or ones that I've seen for a long time, and I've heard experience from other borrowers that, they're pretty legit. There's a lot out there, so I would be wary, do a lot of research if you are going to do that. But these lenders are really known for quick cash, short term, is good for a short term borrowing.
Right. They're not pawn shops.
Right. But you want to be cognizant that make sure that your cash flow can bear it, right? And you don't want to get buried under an enormous amount of debt that you'll never get out from under. So I would be wary of that. And then factoring companies, which would take your accounts receivable, do an analysis on your account receivable and be able to give you some cash flow that way. Mm-hmm. But they would have a lien against those receivables, which is not unusual. Even if I, as a traditional lender, were to do a term loan secured by your receivables, I too would have a lien against them as well. Yeah. So I do see a lot of graduation, let's say, out of factoring where they want a lower rate. So conventional lenders will typically be lower in rate. Factoring is going to be a little bit higher. I came prepared to talk a little bit about SBA because that's a great vehicle, especially for startups, or let's say restaurants aren't as appetizing for most local lenders.
That's a bad pun.
Yeah.
But
for the SBA, that could be okay. So SBA is a great vehicle.
So just to rewind really quickly. So BCU, I believe you told me offline, is not an SBA lender.
We are not. That is not our space. But
there are SBA lenders
there
out
are, and you can visit SBA.gov.
Okay.
And you can there's a find a lender vehicle in there,
Okay.
as well as how-to guides. They have training and webinars that tell you everything on how to find even investors, how to build a plan.
Wow.
It's a wealth of information.
Yeah, it really is.
Yeah. And I did want to mention SCORE, which is a nonprofit.
We had one of the senior SCORE volunteers.
Fabulous.
And they are a great resource, too.
Yes. And score.org is where you can find more resources like that. And they have free workshops, online courses, the whole bit.
Yeah, they do.
Yeah. And those, the people in SCORE are generally seasoned veterans who have been through business and know the ups and downs and can really, really help.
And they're an all-volunteer organization, so
yeah.
It's not like you have to worry about writing a big check for their consulting services because they don't charge it. So.
Yeah, that's very nice.
So I know in the past you've worked for lenders who issue SBA loans.
Mm-hmm.
How are the guidelines for SBA loans, just generally speaking? Are they different than commercial lenders use?
They are. So commercial lending has, again, is going to be dictated through their individual policies on what kind of properties they do and what their advance rates are. The SBA has very, very specific guidelines. You can actually see those guidelines under their standard operating procedures on SBA.gov.
Okay.
So you can see exactly what they're looking for, what qualifies.
So what are some kinds of things that an SBA loan would be looking for maybe that a commercial lender like BCU is or isn't looking for?
Well, you're going to have a little bit of a higher rate, right? Because the nature of an SBA loan is that they provide a guarantee to the lender, which makes that loan more palatable.
Right.
So in exchange for that, you're going to pay a little bit of a premium, right? But you're going to have a longer fixed term loan. So you'll get a better rate at a conventional loan. I think really it's very, very similar because the SBA will tell you too, we want you to implement your prudent lending practices on SBA loans as well. So you really should be using very similar guidelines. But the SBA, I know, requires that if there is collateral available, you have to take it no matter what it is until you meet the loan criteria.
That might be a little eye-opening.
Yeah. So if you have equity in your home and there's no other collateral, they're gonna want that second.
Ouch.
Yeah. Well,
Yeah.
I mean, it's a give and take.
This is why we're chatting, and
Yeah.
I think it's interesting is that people who haven't been down that path before need to fasten their seatbelt a little bit and maybe even look in the mirror a little bit to understand how committed they are to their business.
Yeah. SBA also, at the time when I was doing it, they were requiring life insurance from the guarantors as well, which is not something I would see on the conventional side.
Interesting.
Yeah.
We've talked about the application process. Talk about what makes businesses most successful in repaying the loans that they've gotten. Because, the last thing anybody wants, whether you're a business owner, and certainly the bank doesn't want to see it. I mean, I'm thinking of a neighbor I had up close and personal. He had a carpeting business and mortgaged the house to the hilt, and the business just didn't end up making it, and they ended up having the bank foreclose on the house. Nobody wants to go there.
Yeah.
So how do you avoid those kind of things? What are the common mistakes businesses make once they have credit? And what separates the successful ones from the ones that are, head off in a direction nobody wants to see?
Sure. Great question. So I think a lot of businesses or business owners get into trouble with the business. They kind of panic a bit. They start pulling from private resources, personal resources, their 401k. They start blowing through all of that before they pick up the phone and have a conversation with their lender to say, hey, I'm seeing warning signs in my business. My cash flow is short. I don't know if I'm going to be able to, meet my obligations down the road. If you do see those warning signs, I highly encourage you to pick up the phone, call your lender, let them look at the financials, let them hear what you're saying, and see if they can't help you right the ship, so to speak, or at least get you some resources to to get where you need to go.
So what are the kinds of things that a bank might be able to help do besides give advice? I mean, do you restructure loans? Do you
Yes.
look for secondary financing? I mean, I don't know.
Yeah, I mean, we could definitely do all of those things. If it's something that we can't truly help with, we will try and find other resources. But we do try to look at it and see if we can do it ourselves. I just did a loan recently where I refinanced a couple of SBA loans, and honestly, the cash flow difference for this member is $25,000 a month. I mean, that's huge.
How is that even possible?
Well, because we took a deep dive look into the business, into the assets, and we were able to do a loan, and conventional loans are going to be a little more affordable than an SBA loan. So we were able to get him out of the SBA loans. He was ready to graduate, so to speak. Yeah. And how impactful. I mean, for me, that is so satisfying to be able to truly help a business like that. I mean, that's a game changer.
He or she probably didn't believe it at first. It was probably like, how is this even possible?
Yeah, well, that's possible because, BCU is able to have some flexibility and really look and understand on a deeper level, I think, even the member and that business and take and make a recommendation. So one thing I would say is people should make sure they pay their bills on time. That's a big one.
Auto pay is a good thing.
Usually. It is a good thing. Try not to continue to let your retained earnings go negative. Keep adding to the value of that business.
So how might you go about doing that?
Well, we see a lot of distributions to owners. And so, I would be cautious and leery of that.
So eat mac and cheese if you need to.
Maybe on a reduced scale.
Well, that goes to a very interesting discussion that a couple of past speakers talked about, which is the commingling of personal with business and how that affects the profitability of a business. Is that something you've seen too?
Absolutely. I see it all the time.
Is that a good thing? Is that an inevitable thing?
It's great thing if you have a ton of retained earnings and cash flow. Then that's exactly what you want. But if your business is struggling, not a good idea. Scale back.
Interesting. So what other advice might you offer to business owners?
So I would say become able to read your financial statements and understand the events in your business that impact those numbers. Keep good control of your cash flow. Understand external and environmental impact on your business. Don't ignore that. Make a provision for that, or maybe you need to move in a different direction. Make sure you have a regular dialogue with your lenders. You'll always hear this. In good times when your business is good, you always hear this. Banks are willing to lend on businesses that don't need money. Well, if you're in good times and things are good, get a line of credit just as insurance. You never know what's going to happen.
That's an interesting piece of advice, and one that's maybe particularly relevant as keep hearing rumblings in the news about maybe an economic downturn. So are you seeing an uptick of borrowing because of that?
We are, because the rates are so favorable.
If you think a downturn is coming, and a lot of people do, and your business is in a nice position, you might want to have it in your back pocket.
Yeah. Unfortunately, a lot of lenders, I don't want to say have a knee-jerk reaction, but they definitely respond to those changes, right, in the environment. Right. So they tighten up their credit. So that's why I recommend doing it now.
Yeah. If a small business is interested in getting funding from BCU, what's the first step they should take?
So they can either call us or go on to bcu.org, and there is an application there. But they're certainly free to call. They can call me direct. Yep.
All right. Well, that's an offer people should take you up on.
Yeah.
How might they reach you?
At 847-612-8073.
All right, folks, I hope you're listening to that, because that's an offer that doesn't come along every day. Somebody with 30-plus years of lending experience, personally willing to help give you advice about the process and make sure you're steered on the right path. Any other final words, resources, tools, things that you think that business owners might benefit from? There's always tools online, but some are probably better than others.
Well, I like to use bankrate.com if I'm trying to figure out an amortization schedule or see what my loan payment would be on a loan. That's a great one. They have many calculators there, and that's free. I keep track of rates through the Treasury, and that's the IRS.gov. Wall Street Prime, you check the website and keep track of. Prime just went down again.
Oh, I didn't know that.
Yeah, so
Great.
still a great.
So if I'm buying a house,
yeah,
it might
still
be
a great
good
lending
time.
environment.
Hey, cool.
Yeah. And BCU does a great job on their consumer side. And as far as tools, I think there are so many online, but I really encourage people to start with SCORE and SBA because those tools are still relevant for even conventional loans.
It's amazing how many people don't even know about either of them. SBA maybe more, but SCORE is one of those organizations that kind of puzzles me. I would say 9 out of 10 business people that I talk to have never heard of them before, which is kind of amazing to me. But they are a phenomenal resource. Any final words of advice and wisdom?
Well, I think my final words of advice would just be that the 5 C's of credit are still relevant today as they've ever been, which is your credit worthiness, your character, your collateral, your conditions. So keep all of that in mind and be prepared. When you go and you're ready to lend, be prepared. And it should be an easy process if you've gotten these things in order.
Well, that is some phenomenal advice, folks. Some very useful and helpful inside tips from a lender, a longtime lender, who has seen a whole lot of business loans over the years. Wendy, I just want to thank you again for being on the show. It was really a pleasure having you.
Thank you. It was a lot
And
of fun.
appreciate your time and insights. Thanks so much for listening, folks. You can find more helpful information on my advisory services site, which is globalocityservices.com. There's all sorts of free blogs and tools, podcasts, webinars, and other resources. Until our next show, folks, happy entrepreneuring.